With mortgage rates rising quicker than at any point in history, many homebuyers are finding that they may no longer qualify for the loan amount they were originally pre-approved for. The typical 30-year fixed-rate mortgage is now over 5% for most scenarios and could even be higher. These rates haven't been seen since 2018, and we are up 1.5% in rate from just the start of the year. Over the last 10 years, ARMs, or adjustable rate mortgages, often didn't price out much differently than a fixed rate loan, so it really made no sense to use ARMs when you could just lock for 30 years and not need to worry about the rate ever moving on you. Today, however, that spread has widened, with ARM rates often 0.5% to 0.6% lower than fixed rate mortgages. Based on this, we are advising many clients to take a look and consider 5, 7, or 10-year ARMs instead of a fixed rate. Why? This lower rate can help you qualify for a higher loan amount and keep your monthly payment lower. So what's the risk? Great question. It all depends on how long you plan on living in the house and your personal risk tolerance. Since the average person lives in a house for less than 7 years, overpaying for a 30-year term doesn't really make much sense. Also, most people historically have refinanced every few years, so if rates drop or your personal situation changes, you can always refinance to a fixed-rate loan in the future if that's the better option. The bottom line is that you must be comfortable with this type of loan. You certainly don't want to be waking up in the middle of the night worrying about your mortgage. Based on the current index used for adjustable rate mortgages, the SOFR, the Secured Overnight Financing Rate, currently pricing at only 0.3%. So assuming your ARM rate was set to adjust today, as if you had the loan originated 5 or 7 or 10 years ago, most borrowers would actually be seeing their rates drop on the initial adjustment, not increase. Having an ARM doesn't mean that your rate always goes up. The SOFR index would need to increase by over 2% to nearly 2.5% to see most loans have an increase to their rate on the initial adjustment based on current pricing. So if you'd like to look at this option for your loan and update your pre-approval, we can do so right away and give you the updated, improved pricing. Have a great day and talk to you soon.